It's a bit crazy, guys. Some of Reddit's favorite stocks, the ones that Wall Street has been mocking, are actually outperforming hedge fund favorites right now. Here's also the wild part about this. This recent rally in the stock market, it's not really being driven by institutions. It's actually retail investors. So is this a retail revolution, or are we walking into another bubble? Let's break it down. Now let's start with the obvious. Reddit's top picks have been crushing it. And it's not just meme hype anymore. Nvidia's up over 200% in the last year. Palantir has nearly tripled since late 2023. And Tesla, love it or hate it, it's still dominating. Even GameStop and AMC, yeah, those, I guess you could call them meme fossils. Well, they've showed signs of life again after Roaring Kitty came back, and he's, if you don't know, the one that basically pumped those up in the very beginning. These pigs have actually beaten many blue chip names. So while all this has been happening, hedge funds, what have they been buying? Well, they're in Apple, which right now, year to date, is down. They're in Microsoft, which is, it's steady, but it's not explosive. They're in things like Johnson & Johnson, Pepsi, Berkshire Hathaway. These are all safe, slow, and stable. They're not really chasing this rally. And in fact, they've mostly been watching from the sidelines. Very interesting. So why exactly is Reddit winning? At least for now. Well, simple. Retail investors, they move fast, they pile into trends early, and I guess they're not afraid to take on risk. We're talking AI, we're talking crypto, hypergrowth. Reddit called it before Wall Street ran the numbers. And sure, it's emotional investing. Sometimes emotional means getting in early. But here's kind of a red flag about this. So according to JP Morgan and Vandatrack, this rally has come mostly from retail inflows, not institutional buying. Goldman Sachs actually recently warned that retail positioning has been increasingly concentrated and fragile. Now, what does that mean? That means retail might actually be buying the top. This entire move up could be what's called a dead cat bounce, which is basically a short-term rally in a longer-term downtrend. So editor, if you could put like a textbook dead cat bounce, that could be what's happening right now. And also a quick pause. If you're getting any value from this, make sure you hit the like button, subscribe. I've got it behind me all the time. Also, drop a comment. Do you think retail is getting smarter, or are they just getting louder? Because I guess Reddit's been kind of blowing up now. Anyways, because history has something to say about this, this is exactly why this is kind of an issue. In the 1630s, one of the first bubbles, I guess, that are documented was called the tulip bubble in the Netherlands. I know you've probably heard this before. I know. People sold land, they borrowed money just to buy tulip bulbs. Can you imagine this? Prices exploded, and then they basically collapsed almost overnight. Does that sound familiar? Well, there was the dot-com bubble in 1999 as well. We're talking Yahoo, Pets.com, Webvan. They're all driven by hype, IPO frenzies, and I guess the promise of new tech, which, yeah, I guess it's new tech, but still, the NASDAQ rose 400% in just 4 years. And then it lost 78% in the crash. And now what exactly is going on? I know everybody's heard it. You've heard it from every other YouTuber. But AI is the new dot-com bubble. Everybody's buying Nvidia, SMCI, Palantir like it's the next revolution. And guess what? And maybe it is. But history shows that exponential growth often ends with emotional exits. Literally think about this. When the internet got invented, of course it's revolutionary. AI is revolutionary, but it doesn't mean every single company is about to become a $10 trillion company. Also, okay, here's a quote I kind of keep in mind for a situation like this. The four most dangerous words in investing are "this time it's different." That's by Sir John Templeton, by the way. So when retail gets euphoric, smart money, they start hedging. So what do you think? Is Reddit actually getting smarter, or is this just another setup for collapse? They might be right for now, but historical data, risk management, all of that still matters. So drop your thoughts below. Let me know which of these stocks I should maybe break down and show how laughable of a target price it should actually have, i.e., Palantir, kind of crazy. But until then, stay curious, stay cautious, and I'll see you in the next one.